Welcome everyone. So I thought I'd make this quick video to shed a little bit of light on the new mortgage rules that the Liberal government are putting into play within the next few months. They're releasing them at different increments, but the one that's coming out October 17th, which is within the next 2 weeks, is going to be huge. Affect people. If you're looking to buy a $250,000 house, then you might only be able to afford 200 or just over 200,000. Because they're afraid of the increase in house prices, which have gone exponentially high. It's getting ridiculous in like Toronto and Vancouver. So they kind of want to limit that. And I guess they're also trying to, in the future, they want to raise interest rates. They've been talking about it for a while. Right now it's pretty much impossible because everyone has super low interest rates. And if they were to raise them, a lot of people default on their mortgage. So they're implementing what's called the stress test. So if you're getting a mortgage, usually, if you have under 10%, you're backed by the CMHC, Canadian Mortgage and Housing Insurance Corporation. And now they're implementing that you have to have not only get approved for the 2.4 around is what interest rates are going for now, but you have to be pre-approved or get an approval based on a 4.64 as of September 28th, which is the 5-year fixed rate for mortgages. So if you get approved for that, they're saying pretty much, okay, this person can afford this house at 4.64 interest rate, but they're going to buy it at the 2.4 or whatever it is. And because they have that leeway, then if they were to increase the interest rates, then people wouldn't default on their mortgages. So I'm assuming they're going to start raising interest rates in a little while once more people get these mortgages approved at a higher interest rate. But it's pretty obvious that it's coming. It'll be there soon. We don't want it to happen in Canada what happened in the States, so that's kind of what they're trying to prevent. And if ever we need to implement some fiscal policies to reverse another crash, then we'll have some leeway in the interest rate again if it goes up. So I said a little bit why and who won't it affect. So if you already have a mortgage and you're renewing, it won't affect you. If you're refinancing, then it will. And also if you're buying, if you get approved, I called my mortgage agent as soon as I heard this news, and he told me that if you get a mortgage before October 12th, like an accepted offer, then you'll be good and you can go through on the old laws. So that can make a huge difference. Like I said earlier, if you're looking into a $250,000 home and you're pre-approved, your mortgage payment's roughly around $1,100. Then with this new rule of the 4.64%, then you'd be looking at more of a $200,000 home. So that's a $50,000 difference. That's like 4/5 of the value that you can afford now. So it's pretty tricky. It might affect the market right off the bat. It might have a little bit of an impact, but eventually people will get used to it, and we'll see it become normal again, and it'll just be the norm, and we won't have any more troubles with that. So if you have any questions, please let me know. This is going to be huge in the real estate and mortgage space for all of us working in it. And like I said, any questions, anything, let me know. I'd be happy to help. Thank you.